Today's sponsor is Audible.com. They're a leading provider of spoken audio information and entertainment. Listen to their audiobooks whenever and wherever you want. You know, I do a lot of driving. I'm always listening to an audiobook, and I love it. I couldn't live without Audible. If interested, go to audiblepodcast.com/Lutz. audiblepodcast.com/Lutz. You're listening to the FinancialSurvivalNetwork.com. I'm Kerry Lutz on 1590 WPSL. So after the crash last week, Bitcoin, gold, both took it in the chin. The question is, do you put your money in Bitcoin? Do you put your money in gold? Or what do you do with it? Here to discuss it is Tom Dyson, who is the publisher of the Palm Beach Letter. Welcome back, Tom.
Hi, Kerry. Thanks for having me.
So last week we saw a real slam down in both precious metals and Bitcoin. What do you attribute that to?
Well, I think the Bitcoin is different from the precious metals, totally different reasons. When it comes to Bitcoin, it had to happen. Everyone knew it was going to happen, and it did. There was really nothing surprising about that at all. As far as gold, that was a little bit more surprising, but then, it's a commodities market. It goes up and down. We should expect things like this. I don't know what the exact news that everyone's talking about caused it, and I don't really care either. To me, I like it when gold gets cheaper because I can buy it for less money, and so I was, I was kind of happy that gold corrected a little bit so that we could buy a little bit more at decent prices. I don't want to see gold run away to crazy highs, personally. As for Bitcoin, a very interesting story, and so the price of that, let's call it a commodity, I guess, or a currency, it went from, what, $10 a year ago to $260. Whenever the top of the bubble was 2 weeks ago, and then it crashed all the way down to 50, and that was a wild ride. And I've been watching Bitcoin for a long time, and I owned it. I bought a lot of Bitcoin in 2011, I think. We paid like $6 each for them, so it was a fun ride while it went up, and who knows where it's going to go from here. But I like the premise behind Bitcoin. I've learned a lot just from studying it. I definitely wouldn't recommend anyone buy it for an investment or anything like that, because it's not. It's at this point, it's just it's an experiment. And if you're interested in it, then you should buy some just to learn how to buy it and as part of your analysis of what it is.
Hey, so Tom, let me ask you:
Yes.
have you ever used Bitcoin to purchase an item on the internet?
I have. I definitely have. I've purchased a couple things, more through just testing, and I'm not going to say what I purchased. But,
No, you don't have to. I just was curious if you'd used it, because a lot of people buy it, and then what?
And then what? Yeah, you can't do anything. Well, one thing I did buy with it were physical Bitcoin tokens.
Oh, they
Called
have them now?
Cassius. They're called Cassius coins, and they're pretty cool. I've been giving them away as gifts to people. But you can also make paper. You can print your Bitcoins out on paper for safe storage if you want to. But you're right. Like, Bitcoin to me is not a currency yet because you can't buy anything with it, and that to me is one of the definitions of what makes a currency useful, is that you can buy stuff with it. So at the moment, Bitcoin, I think you can buy some alpaca socks. There are websites. There's a new store that sells electronics, and you can buy a lot of the stuff in that store. You can compare it directly to Amazon, and it's cheaper on the Bitcoin site because they don't have to pay processing fees, transaction fees, credit card fees, anything like that. So they can actually pass those savings on to the consumer. So I thought that was pretty cool.
That's interesting. I wasn't aware that you could actually buy things cheaper. I knew the transaction costs were lower,
Hmm.
and that makes a lot of sense because you don't even realize how much of your everyday life is consumed by transaction costs, mainly because you go to a supermarket, you pay with your cash or credit card. It's the same, which means that the cash customers are subsidizing the credit customers.
Hmm.
And when you go on to Amazon, you don't have any choice but to either use PayPal or credit card. So right away, you got 3% tacked on to every transaction that you're doing on the internet, at least, probably even more than that under certain situations, if it's smaller purchases. So Bitcoin has the potential to really cut out the credit card processor market, the clearinghouse, and just allow you to pay direct without a middleman.
Yeah, absolutely. That's to me, I was going to say, another thing I've used Bitcoin for, which has been very useful, is not for buying stuff, but for moving money between two different countries. And so I have some money that I have in UK from when I used to live there in London, and I've found Bitcoin to be very useful so I can move my money from London to here in Florida, or I can move from Florida to my account in London very easily using Bitcoin. So what I would do is I would take my dollars, I'd convert them into Bitcoins, then I would send my Bitcoins to England using the internet, and then once they arrived in England, I then convert them to British pounds, and then I send those pounds into my my London bank account. So that to me, Bitcoin, if I was Western Union, I'd be watching Bitcoin very closely because I don't think it makes sense. Western Union's business model, I think this is a huge threat to that, is the payment processing. Western Union has a fantastic business where it acts like a toll road, and it collects fees from all the money it that it processes.
Hmm.
Now it's like, imagine you're the owner of a toll road, very nice toll road that makes a lot of money, and all of a sudden a new technology opens up a free road
Uh-huh.
just parallel to yours. And well, I would be very worried about that business, about that toll road. So that's one thing I think Bitcoin is extremely powerful for is moving money, is moving funds around the internet.
Wow. And if I had my choice at toll roads, I would probably take either the New Jersey Turnpike, or if I could get a toll bridge, I'd take the the George Washington Bridge that connects New Jersey and Manhattan, both most profitable toll roads and toll bridge around. But what's interesting is that the way you're describing, which is interesting because it's a novel use of the currency to effectuate wire transfers without the accompanying fees. And you also, whenever you charge on your credit card, when you go overseas and you're charging things in England or France or China, whatever, you're paying an additional at least 2% commission for converting your
Oh
dollars,
my goodness. Yeah,
and
the
you get to
fees are
avoid that.
astronomical fees for moving money around. The banks just have you completely at their disposal and they can charge you whatever you like. And there's another very important point to this too. Whenever you use the banking system to transfer money, you leave a huge footprint. And Bitcoin allows you to make the same transactions anonymously without anyone being able to track what you're doing with your money, which is how it should be. There shouldn't be anyone watching you. Just like with the money in your wallet, no one's watching if you hide it in a drawer or give it to a friend or buy something with it, and that's how it should be. Not that I'm doing anything wrong. That's not the point. It's the principle, and Bitcoin allows you to do these international transactions without any um, path, without leaving any record. So that's very
Yeah,
powerful.
the anonymity of the whole process is another thing that's very attractive, and it really puts Bitcoin on a collision course with the U.S. government and the U.S. government and all governments, because look, they're all on the prowl to steal and confiscate as much of your wealth as they possibly can, because everything you own, the government feels that it is entitled to, especially in
Hmm.
so-called emergency conditions. So can you anticipate other rivals to Bitcoin coming up, propagating shortly?
Yeah, absolutely. But I wouldn't call them rivals. In fact, I've already been looking at this. I would call them, what's the word I'm looking for? They're cooperative. And
Co-opetition, as they call it.
coopetition, yeah. I think one of Bitcoin's flaws is, well, what I'm excited is that electronic money, like the internet, can provide payment processing. And I think what we're seeing is different inventions for different uses. Now, Bitcoin, because its price is so volatile, it's not actually that useful as for transacting. And you don't want to be transacting in something that's going crazy in value because then you're constantly adjusting your prices and it just makes it difficult. And it makes it, there's a risk there too to doing business with it.
The currency risk, effectively, in the
Exactly.
same currency. And I wanted to bring up that point because you go through these exchanges. The big one is MGOX.
Yep.
And you go to each exchange, and there's such divergent prices that it reminded me of the old days of day trading when you could buy the stock from one market maker and sell to another. Here, you could buy from one exchange and sell to another and probably turn a profit
You
doing it that
can,
way.
yeah. It's very illiquid, the market in Bitcoin. It's so small. In fact, it got way more attention than it really merited based on its size. I mean, to me, Bitcoin, the whole entire market was about the same size as what I would consider a small cap stock.
Right.
And so most small cap stocks, most of us will go through our entire lives never hearing about them. And I'm talking about companies with market caps below about $1 billion. That would what I would consider small cap in my analysis work.
Right.
And so Bitcoin had a market cap below $1 billion up until just a couple of months ago. And so here you've got a small cap stock, but it's one that suddenly received international attention from all over the world, and there was no limits on anyone buying it. Anyone could buy it who had access to a computer. Of course, its price went absolutely nuts, just as would happen if you take a typical small cap stock and then made the whole population around the world of all these nerds and crypto hippies and etc. buying this stuff. Well, of course, its price went absolutely nuts. But we all forgot that this is just a tiny little experiment, and I'm not sure how I got onto this tangent, but it's Bitcoin is a very small market, and we need to treat it like that still. And so these other competitors are coming along, and that's one thing. I think Bitcoin is very small, and so it is interesting for the principles that it teaches us, but actually for practically using it when it's bouncing up and down, I don't think it's that useful. And so there's this other one called Ripple, which I've been reading about, and I don't own any, I don't know anything about it. I just signed up for their list. And they want to be like Bitcoin, except there's a much greater supply of these ripples, and you can get them for free somehow. And what's supposed to happen is is like Bitcoin. You can use it to send money around the world and things, but there's not that price. There's not the price volatility because there's so many of these things that there's plenty of supply for everyone. So this you would never invest in. You don't want to invest in something with unlimited supply, but it seems like it does solve the problem of the price volatility in terms of a payment processor. So very interesting. I'm just bullish in general on the whole concept of digital or internet currency. I think we're long overdue for a way of being able to pay people as if we were paying them cash, except without relying on the banking system to do this for us. Another way, like the internet allows complete freedom of information. We can communicate with each other for free. And we couldn't do that before the internet. We would have to write a letter or make a phone call. Now the internet, we can communicate free and very clearly. And so I think that the internet is now branching into a new this is a new stage where it's not just information, but it's money that's actually getting moved around by the internet, and that's a huge new step. I think a huge technological advancement, and when you're paying for something through Amazon, you're not really paying on the internet. PayPal is not internet. PayPal is the banking, it's the traditional banking system that has just been kind of adapted to work with the internet. But when you're making payments online, you're really using the traditional brick and mortar banking system to make that payment. Bitcoin is the first time that we have been able to use the internet to pay each other, and I think that could be a huge revolution, whether or not it's Bitcoin. But digital currencies, there's no way we're going back now. The genie is out of the bottle, and it's can't wait to see where this goes.
Yeah, it's pretty exciting. And, you know, somebody once said that the internet is the great middleman killer.
Yeah,
And if you look at it, travel agents, what were they? Middleman between you and the airlines and you and the hotels, you and the rent-a-car companies. Guess what? Don't have them anymore, although the middleman has somewhat evolved because you can still use an internet travel agency, but they're more like a connector, a shopping tool, more
right.
so than actual a middleman. I mean, the airlines don't even pay the big agencies a commission any longer. And then you saw it with stocks, where you could just place your orders direct through a middleman, but greatly reducing your transaction costs. And now, when you think about it, it's the banks are just intermediaries. Which what's the definition, Tom, of an intermediary?
It's a
They're
middleman.
yeah,
Yeah.
they're just your middleman. So now the internet is going to slay or drastically reduce the profits of the middleman, and no wonder they have to charge you a fee for everything. But pretty soon you won't need to keep your money in a bank, and a lot of people now, for whatever reason, they're unbanked. They get paid on a debit card, a prepaid debit card, and then they just take that card around, buy your groceries with it, buy your gasoline with it, whatever you need, but you no longer theoretically have a bank account.
Hmm.
And it's just a matter of time till the internet kills the middleman on the prepaid bank card, because there your middleman is Visa and MasterCard.
Yeah, it's going to be so interesting to what happens with payments. Like I find payment, the whole concept of just of payments and money and value transferring is very interesting, and it's the next, as you say, it seems like it's the next area where the internet's going to cause huge upheaval. So it's definitely something to watch. I'm going to be watching, and I've never written about this in Palm Beach Leather. I'm just talking to you about stuff that I think about personally. We've never talked about Bitcoin in Palm Beach Leather because we felt that A, it's way too experimental. B, it's not an investment, and C, it's kind of nerdy. Bitcoin is very complicated. It's very attractive to computer guys. When before I bought Bitcoin, I spent an entire weekend holed up in my house learning how it worked and how to move it and how the software worked and until you've done that work, I wouldn't really recommend even getting involved with Bitcoin because there are risks there and um, technologically it's easy to it's easy to have it stolen or hacked or to delete the file and things like that. You've got to be really careful. So we just now in Palm Beach Leather, we were writing our first report about Bitcoin. And again, the angle is this is not an investment. No one should be putting more than like $500 into it. But it is a potential very useful tool for financial survival. And that is because it's private, it's secret, it allows you to move money anonymously, and and so we just think that our readers should start to get familiar with it. That's all. Not try and make any money from it or anything like that, but just to get a little bit familiar with how it works and what it allows you to do. And and so we're just publishing a report on it now in Palm Beach Leather. But up to this point, this is something that I've just been following, on the side. And wow, it's been so interesting.
Yeah, it's fascinating and funny how you mentioned financial survival. Living in a world where the government wants to take more and more from you and believes that more and more of your wealth is their right, you really need to start thinking about these defensive moves that you can take. And I'm not saying move your money out of the country because I'm not sure that any country is safe at this point, but certainly digital cryptocurrencies are a big step in that direction. So getting on to gold,
Hmm.
you think that this was just a standard correction and based on the actions that the world's governments are taking and the world's central banks, that for the long run, gold is going to still afford protection against expropriation through inflation?
Yes. So we've talked about this in previous interviews, and I've said that my I don't know the future, and I I I'm not sure how it's going to play out in terms of inflation and deflation. I think we'll probably get a little bit of both, and I think we'll probably get the deflation first, followed by the inflation. But when it comes to my money and my readers, we're not predicting and we're not trying to profit from one or the other. We set up our portfolios to be agnostic, to make to protect us and to do what they're supposed to do in either situation. And as for gold's correction, again, I'm not. I don't like finding reasons to explain market moves. I think the markets do whatever they want to do, and then whatever the markets do, drive the news and the fundamentals. And so maybe gold is trying to tell us that. Um, Maybe gold is trying to tell us that we've got a little bit of deflation coming up. Maybe we've had some good inflation, and now it's time to cool things off, and there might be a little bit of a reduction in demand, and I'm not sure. I'm not
It
sure,
might
but
be it might be telling us that some of those too big to fail banks are going to fail and that you're going to see a dramatic decrease in the money supply as a result. And, you know, like you say, it's too early to know, but it's sending us a message.
Mhm.
Unfortunately, when it sends these messages, we don't always understand them till it's too late. But if you were a betting man, you'd be saying a little bout of deflation where where money supplies, by definition, deflation means a decrease in the money supply. Forget about consumer prices. Those are the end result. But inflation means increased money supply, deflation means decrease, and you could well be seeing that happening in the euro right now.
Right. I gold is a very small market. Again, it's not as small as Bitcoin, but it's in
Yeah.
the scheme of things, gold is absolutely tiny. So I like gold as a thermometer because I feel that very small changes in the global markets will have outsized changes in the gold market. So I think gold is very sensitive to what's going on, and it's like a thermometer. So so I watch gold for clues as to what may be coming next. I haven't proved this, or I have seen others show evidence that gold does lead the other markets at important turning points. So what does gold mean? I mean, who knows? But if I had a very long position in the S&P right now, if I had a lot of stocks, that gold plunge would be a little bit scary to me. And likewise, if I'd bet on if I'd bought a load of treasury bonds, hoping that their prices would go up and interest rates would keep going down, I'd be a little bit worried right now with gold and silver's action recently. So, um, not sure what to make of it, but seems like it possibly could be saying that there's it's just a little bit more fear in the market.
Something's afoot.
Yeah,
So you've got a new service, I understand, at the Palm Beach Letter.
yeah. It's called the Wealth Builders Club. So, um, we surveyed our readers a while back, and we found that um, our readers just aren't as wealthy as we thought they were, and many of our readers, um, about 70% of our readers, told us that they had less than $20,000 in investable capital.
Really?
Yeah.
God,
So
for a publication called the Palm Beach Letter, I envision them driving down A1A in their convertible Bentleys, sipping champagne by the beach.
I know. Well, that's where they want to get to, and and there's no doubt we do have some readers who have lifestyles like that. But and I would say on average, the average reader of the Palm Beach Letter is definitely much better off than the average American. But that said, it's still, a lot of people out there are struggling and they're not where they need to be in order to give up work and retire. And so, um, and we found that, this is a lot of our readers. They're older. They're they're basically approaching retirement, or they're already in retirement, and they may not have enough money to see them through. And so, um, the advice, it's a challenge to come up with the right advice for these people, and mainly because it's a question of time. If you have unlimited time, anyone can be a master investor. When it gets difficult, and that's because of compounding. Give me 100 years, and I can turn any amount of money into an infinite fortune without really doing anything very difficult or special. But give me 10 years or 15 years, and now it's a lot more challenging. And one of our messages is that you can't do it by investing. Investing alone is not enough. You really can't expect to get rich from investing. And I don't even think you can really expect to make that much more than a maximum about 10% a year from investing. And I think that would be a fantastic return. In fact, if anyone could make 10% a year, I would definitely give them a lot of money to manage for me.
That's Warren Buffett sized returns there.
Yeah, Buffett did his career. He's done 19% a year over his entire career. So 19% to me is about as high as you can possibly expect. That's what's the richest investor in the world, the most successful investor in history. He did 19% a year. So first of all, if anyone tells you they can do better than 19% a year, they're telling you they can do better than Buffett, and you should probably be skeptical of that claim. Anywhere between 10 and 19%, you're looking at extremely high returns that only a handful of people have been able to pull off year in, year out. And then anything from 5 to 10% is a market-beating return, and you're probably taking on a little bit of risk, and then anything from 0 to 5% is pretty much what you can expect from any type of conventional investments like bonds and dividend-paying stocks. So,
so 10%. This is an area where if you do pretty good, you've beaten just about everybody except for the masters. So,
right.
So the wealth building club here.
Yeah.
What's the strategy for really building it?
That it's got nothing to do with investing. The Wealth Building Club is our collection of ideas to help people generate income for themselves that does not come from their investments. So call it maybe an active income. So for example, it would be how to move to a place where it's cheaper and set up a new business, or how to retire in a place where the cost of living is much less. We also have a series on starting your own retirement business, or on managing your credit. There's a lot of things you can do to build income that doesn't involve investing. If say you only had $20,000, there's no way that you can live off that from the income that spins off. But you can you can do other things, and there's a lot of ways of earning multiple streams of income, and that's what the Wealth Builders Club focus on. It's a club for our readers to get together and explore all these different ways of generating income. And we talk about photography and writing and travel and tourism, and we've just got all these great ways that people can explore creating second incomes as they approach retirement, or once they're in retirement, to feel much more financially secure. Because once, like I'm only 37 years old, so I have at least 30 years ahead of me, I hope, of good active income generation. So at this point, mistakes don't really cost me that much because I've got time to fix them. But if you're 65 and now you retire, you don't have an active income, not only can you not afford to make any mistakes with your money, because you lose it, it's gone. You're not getting it back, and the income. You can't be spending. You don't want to be spending your principal either, and the income with interest rates at zero, the income is not going to be sufficient to live on unless you have at least like $2 or $3 million. You need a separate income, and um, so basically that's what the Wealth Builders Club's about, and we've we've written a fantastic course, and it's a program, and we've received thousands of testimonials from the customers who are absolutely loving it. And if you want to learn more about it, we've put a link up at www.palmbeachleather8.com. That's www.palmbeachleather8.com.
That sounds really practical. It's something that I might just sign up for as well. I'm 55. I figure I got 10 good years left, earning years, I hope.
Mm.
And, through various investment missteps and other issues, I'm not as well off as I once was or I'd like to be in the future. So it really sounds like it has value, and I'm going to check it out as well. And Tom, we got to get going now, but so it's basically Palm Beach 8, palmbeachletter8.com, and we will talk with you again next month. It's always a pleasure. You be well.
Thank you very much, Kerry. I'll talk to you next month.
Okay, bye.
Bye.
Remember, go to our sponsor's site, audiblepodcast.com/Lutz. They've got over 100,000 audiobook titles. All the latest books generally you're going to find there. It's such a great thing. When you have a long car ride or you're working out at the gym, whatever, it's something that you'll really enjoy. I do. audiblepodcast.com/Lutz.